What's going on, everybody? I hope you're having a good day as always. So recently I had to transfer an old 401k program that I had with my previous employer into an IRA. And I wanted to take this opportunity to discuss pretty much a few of the basics when it comes to an employer 401k because they're a great asset to utilize, and it's something that I want to expand upon. So that's what I want to talk about today. Also, if you enjoy learning about personal finance and money discussions in general, I would invite you to join the channel. So please make sure to subscribe and hit the alert notification button. That way you join the community and we can help everyone make smarter financial decisions. But let's go ahead and get started with the 401k conversation. All right, so first off, let's talk about the basic stuff. What is a 401k, right? If you're really new to this, you may not know what it is, but pretty much it's a retirement account that is sponsored by your employer, right? You may have heard of another term called an IRA, which stands for an individual retirement account, but that's something you set up on your own, and it's through your own personal account through your investment broker, or let's say your financial institution for that matter. A 401k is something that's done through your employer specifically. When you sign up with a company, you're going to elect whether or not you want to participate in that program, and if you missed out and you didn't sign up the first time, you're more than likely able to sign up later on down the road. But in essence, it's really a retirement account set up through your employer specifically, and it's going to be something that you contribute to over time. But the goal is that you won't be taking any of that money out until after you retire, that we don't pay any penalties. And it really is a form of an investment account, right? A retirement investment account at that. Now, this next part I'm not going to make too complicated or confusing here. And I would always take a moment to say that, hopefully you've got a really, really good person in HR that you can discuss these issues with. So definitely do that if you have really specific questions about your specific employer 401k. But let's talk about Roth versus traditional, right? Because hopefully your institution allows you to do both. Really simply, it's all a matter of when you pay taxes with your 401k. With a traditional 401k, it means that whenever you contribute money, whenever you put money into your 401k, you don't have to pay taxes on it. It lowers your taxable income and it's a benefit for you that taxable year. But whenever you retire and you start taking money out of your 401k, then you have to start taking taxes out of that. It's counted as ordinary income. Now, on the other hand, it's kind of the opposite when it comes to Roth 401ks. It means that whenever you're making contributions, it doesn't lower your taxable income. You have to pay taxes on that money. It's not the benefit for you right then and there. The benefit comes when you take your distributions. It means that you don't have to pay taxes on your distributions because you paid them up front ahead of time. Now, if you're thinking about setting up a 401k and you're not sure which one to choose, I would look at it this way. This is a very elementary way of looking at it, but it's pretty much the gist. When do you think you're going to be earning more, therefore paying more in taxes? If you think, okay, more than likely when I retire, let's say at 60 years old, I'm going to be earning more money than I am today, maybe at 25, right? You would want to set up a Roth 401k and pay taxes on the money now, because more than likely you're going to be in a lower tax bracket now than you will be at your retirement age, right? However, if you think for whatever reason you're making more money now than ever before and your tax bracket will be lower when you retire, you would want to more than likely do a traditional 401k. But either way, that decision is going to be up to you. I'm not here to tell you one way or the other which one you've done. I did a Roth 401k personally, and when I rolled over into a IRA, I rolled over into a Roth IRA, and I'm going to get into that a little bit later in the video. But that's pretty much the gist of it, Roth versus traditional. One's not better than the other. It's all about situation. All right, the next little bit of terminology I want to discuss is matching contributions through your employer. And I've discussed this on another video, but I think it's worthwhile in repeating myself here because this is absolutely huge and one of the main reasons why you would want to set up an employer 401k. Pretty much it works like this. Not every employer will do this, but most employers have a matching program, meaning that if you contribute to your 401k, they are going to match a certain amount, right? It may be that they match 50 cents on the dollar. It could be that they match 25 cents on the dollar. It could be that they match dollar for dollar after the first year. Every single employer is going to do this differently. The point is they are giving you free money if you contribute to your 401k. And it would be absolutely ridiculous not to take advantage of this, right? It's free money, right? You can be earning a good rate of return on your investments in your 401k, but you're also earning extra money because of the employer matching program. So it really does not make any sense not to take advantage of this. Personally, I'll let you know that when I closed out my old 401k after I left my employer and moved it into an IRA, the balance was just under $60,000, and I guarantee you I did not put $60,000 into that account. And because of that, I'm absolutely happy that I took advantage of my employer, who was generous enough to give me a very solid matching program. And I would suggest that you look into yours as well. So if you're just now starting a job, and again, you're thinking about setting up a 401k, talk to your head of HR so you fully understand how their matching program works, so you can take advantage of it as much as you possibly can, because again, it's a huge benefit and you're passing up free money if you elected not to go this route. All right, the next little bit of terminology I want to discuss is your vested balance, and I think this is probably the next logical thing to discuss because it ties in to your employer matching contributions. But your vested balance essentially is how much ownership do you have of your employer contributions. And I'm not sure if that makes sense, but let me talk about this further. So let's say that you've got a company that will match dollar for dollar. So you contribute $5,000 in a year to your 401k, and your employer contributes an additional $5,000 to your 401k. So you've got $10,000. Okay. Well, if your employer has, let's say, a 5-year vested balance period, it means that if you were to leave your company after that first year, you're not going to take all extra $5,000 with you when you leave. All right, my old employer had a 5-year vested balance program as well. So let's say that I stay with the company for 1 year, but I leave after 18 months. It means that I'm only able to take 20% of the vested balance with me. If I leave after 2 years, I only take 40%, and on and on and on until you go to 5 years. Once you hit 5 years, for me at least, I was fully vested. That means that I could leave the company, I could close out my 401k, move it over to an IRA, which I did, but I got to take everything with me. I was fully vested. That may be another bit of terminology that you've heard. So this is really important to understand if you want to set up a 401k through your employer, but you're not sure how long you're going to stay at the company. If you're staying with the company for 18 months, but you're not going to be able to take everything with you, you may not be as motivated to contribute as much as you possibly can to try to max out their matching program, because you're not going to be able to take it all with you anyway. However, if it's a company you absolutely love and you see yourself staying there for a very long time and you will fully vest into your 401k, absolutely take advantage of it. Again, it's an awesome program to utilize. All right, now the last little bit of information I want to discuss is transferring and rollovering a 401k, because let's face it, even though you may stay and get fully vested with your 401k, you may not stay at this job forever, and I don't want you to feel like it's not worth opening up a 401k and starting your retirement savings if you know that you're going to leave the company anyway, because you can transfer and roll over your 401k into another form of retirement without any penalty whatsoever. And that's what I had to do recently. Personally, I have left my job a few years ago, but I maintained my 401k account because it was still earning a pretty good rate of return, and I just didn't really see any need to it. However, I've now transferred it over to my Wealthfront account just so I can have everything kind of under one roof when it comes to my investments. The main thing I want to get across is that I was able to close the account and transfer it over. So it really shouldn't scare you to set up a 401k feeling like you're locked into that forever, because it's absolutely your choice if you want to move it later on. The only thing that I'll say is, whenever you transfer and roll over, there's really, really specific ways that you want to do this so you make sure that it's not a taxable event. I would definitely make sure that you read any instructions that your current fiduciary would have. They wanted to make sure that any check that my current 401k sponsor sent out did not go to me directly, right? It was payable to Wealthfront, but for the benefit of myself, and it kind of has to be done that way, so it's not as if you're receiving the money. Because again, this is a retirement account. You're not supposed to receive this money at any point until you retire, or else you're going to pay a penalty. And the last thing I personally want to do is pay a penalty, so I want to make sure to follow instructions when it comes to transferring and rolling the stuff over into an IRA. And that's why it's important to kind of follow those rules. Likewise, when it comes to rolling over or transferring a 401k, you want to make sure that you're setting up to the right type of account, a Roth to a Roth or traditional to a traditional. That way you're not creating any hiccups at all. But the main benefit is that you are able to carry this with you even after you leave your employer. So again, I personally think 401ks are an amazing way to get started with retirement savings. It doesn't mean that you have to max out all contributions, and as of 2019, I think your maximum contribution is a little over $50,000. So I'm sure the majority of people are not contributing that much. But even if you contribute 5 to 10% of your paycheck each month, it will absolutely lead to huge savings. Again, for me, $60,000 is not insane as far as retirement accounts are concerned, but it's still a very solid start into retirement planning, and I'm happy that I was able to take advantage of that, and I'm able to take even further advantage of it now by transferring it into an account that I kind of manage myself. So all in all, that's kind of what I want to discuss today. I hope you guys found that information beneficial. If you've got any questions, please let me know in the comment section down below. Likewise, if you've got anything else to add to the conversation, make sure to let everyone else know as well, because I want this to be a conversation. That way we can all gain from each other's expertise. But thank you so much for watching, guys. Don't forget to like, subscribe, comment, share. If you feel like supporting the channel in any way, I've got a Patreon and an Amazon link down below. Any help is greatly appreciated. I do my best to make these videos benefit you guys, and so when I receive that reciprocated appreciation, I really, really do love it. But all in all, thank you so much for watching, guys. Make smart financial decisions, and I'll see you guys next time. Hey guys, I know I just said this stuff, but let me say it again. Thank you so much for watching this video. I appreciate all the support that you guys give me. And to support you, here's 2 more videos that I've made in the past in case you haven't seen them. Don't forget to share these with your friends and family so we can help all the people achieve their financial goals. Likewise, if there's anything that you would want to see made that you haven't seen thus far, definitely don't hesitate to let me know. But thanks again, take care, and have a good day.